investors have long favored water utilities for their steady growth and reliable demand. These three water companies each bring unique strengths. Stick around to discover what makes them unique investment choices. Starting with American Water Works, which stands as the largest and most geographically diverse water and wastewater utility in the United States, serving roughly 14 million people across 45 states and Ontario. American Water Works has been publicly traded since its IPO in 2008 and has a solid track record in the stock market. While its stock has had some ups and downs due to regulations and overall market changes, it has generally trended upward over time.
New tonight, the largest water utility company in the U.S. says it's the victim of a cyber attack. This comes after the company discovered the unauthorized activity on Thursday and began shutting down certain systems. The company says it does not believe its facilities or operations were impacted by the attack, and it's investigating the cause.
American Water Works' financial performance has been steadily improving over the years. Its revenue grew from about $3.8 billion in 2020 to $4.5 billion in 2024. At the same time, the profits have also increased, rising from $820 million in 2022 to $944 million in 2023 and nearly $1 billion in 2024. This consistent growth shows the company's strong financial health. The outlook for American Water Works is strong. Experts expect its revenue and profits to keep growing, thanks to smart investments in their infrastructure and possible acquisitions. The company is also working on advanced water treatment solutions and expanding into areas that need better water services. American Water Works has a price-to-earnings ratio of about 26 and a price-to-sales ratio of about 5.4. They have about $32 billion in total assets and $17 billion in liabilities. The debt-to-equity ratio is around 1.9, which means that they rely heavily on debt financing. Like many utility companies, it has steady cash flow and they continue to reinvest it. A big reason for American Water Works' success is its strong and steady leadership. CEO Susan Hardwick leads a team that balances experience with the long-standing company tradition. American Water Works faces some challenges like regulatory changes that could impact pricing and costs, as well as growing competition in some areas. However, the company has strong risk management strategies in place. It stays ahead of environment regulations and invests in green initiatives to tackle these issues. American Water Works is a strong choice for investors looking for stability and steady growth in a well-regulated industry. With a solid financial foundation, a reliable management, and a smart growth strategy, American Water Works is a great fit for a long-term investment portfolio. Moving on to another water utility company, Sabesp is a Brazilian company that has been publicly traded since 2018. Sabesp is traded on the São Paulo Stock Exchange and is partly owned by the state government, while the rest of its shares are available to the public. As one of the world's largest sanitation companies, it holds a strong market position. Sabesp operates in a highly regulated sector, where its financial success depends on government policies, infrastructure spending, and population growth in the area it serves.
Are you convinced that actually privatizing, for example, the water utility company Sabesp is the best option?
It is. It is the best option for us, and the best option for Sabesp. Is the largest company in South America, largest in Latin America. And we are convinced, Meirelles and I, that is the best way to Sabesp.
Sabesp has steadily increased its revenue over the years by expanding its services and improving infrastructure. However, its profits have been affected by government limits on pricing and the high cost of environmental and sanitation projects. Rising inflation and higher operating expenses also put pressure on this company's profit margins. SBS stock is valued like a typical utility company, meaning it offers steady earnings rather than rapid growth like tech stocks. While the valuation may be lower than high-growth companies, it provides stable and predictable returns, especially when interest rates are low. They have a price-to-earnings ratio of around 15.8 and a price-to-book ratio of around 1.6. As of September 30th, 2024, they had a net income of $1.6 billion USD. Sabesp faces a few key risks that could affect its financial performance. Changes in water supply, regulations, and the effects of climate change can all impact its ability to provide reliable services. Since the government plays a big role in setting water prices, political decisions and policy changes affect the company's earnings significantly. Looking ahead, Sabesp will likely keep investing in infrastructure and sustainability projects. While it may not grow as fast as some other industries, its role as an essential service makes it a stable option for the long term. Changes in regulations and potential private sector involvement could also influence its future growth. Moving on to the third company, Essential Utilities, ticker WTRG, is a utility company based in Pennsylvania that provides water, wastewater, and natural gas services.
Sam in Massachusetts. Sam!
Jim, I may be calling in from Massachusetts today, but here's a company that I discovered in my hometown of Bryn Mawr. That is Essential Utilities, the ticker WTRG.
I know it well. It's a great company. I used to recommend it literally in the 80s and 90s when it had a different name. That is a terrific stock in Bryn Mawr.
It serves around 5 million people across 10 U.S. states through its subsidiaries, Aqua and Peoples. In the fourth quarter of 2023, Essential Utilities saw strong growth with net income rising to $135 million, up from $114 million the year before. Christopher Franklin is the chairman and CEO of Essential Utilities. The company has a stable leadership team and no major changes recently. Essential Utilities has $17 billion in assets and around $9 billion in liabilities. Its debt-to-equity ratio is around 1.3, which shows the company uses a moderate amount of debt compared to its equity. Essential Utilities has been a publicly traded company for many years. Over the last 5 years, its stock price has had some ups and downs, but it has generally been moving upwards. Analysts have a positive outlook on Essential Utilities, expecting steady growth in revenue and profits in the future. The company is also focused on upgrading their infrastructure and looking for new opportunities to acquire new businesses. The utility sector is seeing more and more demand because of factors like population growth and improvements. Economic conditions such as stable interest rates and moderate inflation will also help the sector grow. Essential Utilities generates more cash than it needs to operate, allowing it to reinvest in its facilities and keep paying regular dividends. Most of the cash comes from its operations, with manageable spending on maintenance and growth. The company offers a dividend yield of 3.65%, with a payout ratio of 55%, showing its dividend payments are stable and sustainable. Essential Utilities is a stable investment offering a range of utility services and a strong financial track record. Its focus on upgrading infrastructure and strategic growth plans put it in a good position for future expansion.